Good morning and welcome to the Option Pit AM Volatility Report. I'm Mark Sebastian, the founder of Option Pit. Uh, boy, kind of a weird couple of days after really being up significantly most of the day, then kind of tailing off a little bit. We actually ended the market uh, down by 5, and then here we are today. That would be a perfect day for the market to have follow through and to sell off, and instead we have a tepid rally. Now, and when I say tepid, I mean pretty tepid. Now, yeah, you got the S&P futures up 7, and Dow up 80, and the RUT up 4. But if you take a look at what VIX futures are doing, they're not moving very much. They're not selling out on this VIX sell-off. So VIX is in 40 points. These futures have about a week to go. The April ones expire tomorrow. Let me get the April 13th expire tomorrow, and they're still trading at a decent premium. So there is definitely a lack of selling out among the VIX futures, which is kind of interesting. That may change as the day progresses. This day has a very different narrative than Monday and Friday did, in that we're not opening up big. We actually opened up basically flat and have since rallied. So it certainly has not the same narrative, but that doesn't mean it won't have the same end result. We could absolutely see things soften around the European close, or who knows. The last couple days, the path has been soften up a little into the European close, then soften up a little more toward the end of the day, and then maybe finish up or down a couple of points. I'll be really interested to see whether that continues or whether we really do give it up and markets rally. Alcoa earnings were not that great. It's down some. They're laying some people off. But the stocks recovered from kind of the lows last night when it was down more. And if we look across the board, the financials continue to be doing okay. We've got a lot of earnings coming up in the financials. You got J.P. Morgan later in the week. I believe you've got Wells Fargo later in the week as well. So some big bank stocks. Bank of America, Citigroup I think is next week. Nope, Citigroup this week too. So you got 4 of the 5 really big earnings stocks or financials this week. That could make a big difference and could really affect markets because the lone really soft part of the market. XLE, you'd see oil continues to recover. We've seen a great rally in oil and back above $40 and a nice rally in XLE. So it's just been kind of dragged down by the financials and dragged down by the overall market. So I'm really fascinated to see how these next couple of days play out. We seem to be in a bit of a time correction. A lot of people are like, oh, we haven't gone anywhere in a month. That's not the end of the world. So, when you get a really quick, fast rally, all right, what I want you to take a look at is these moving averages, the 50 and the 200. And you really run away from your 50-day moving average. A time correction occurs when the market kind of flattens out, doesn't really do much for a little while, and you see the moving averages just go up and up and up and up and up. And that's kind of what's happening. In the last week, as the market's basically done nothing, all right, we opened on the 5th, or let's just say March 17th. That's the date everyone likes to point out. So on March 17th, the 50-day moving average of the S&P 500 was 1930. It's now 1978. So it is climbing higher and higher, lifting those technical barriers that a lot of people look at, and that's what a time correction is, and that's maybe what we're experiencing a bit while we chop. Is the market up to the market? All right, underlying technical stuff, which, I'm not a huge technical guy, but a lot of people look at it, so you have to. That's kind of what's going on. And then we should see the 200-day start moving positive here shortly. That's going to have a big effect. So I think that is a little bit of what's going on and where this chop is coming from. We've also seen VIX. We're in earnings season. It's chopped. It's climbed a little bit. Nothing crazy, but it has climbed a little bit. One indicator that we like to watch. Take a look. With the S&P, you want the 50-day moving average above the 200-day. With VIX, it's the opposite, and you can see that as of yesterday, that 50-day moving average actually fell below 200. That means a lot less on the VIX side, but there are people that are watching that are thinking, oh, big technical indicator. Probably not, but it's something to be aware of. Meanwhile, volatility has crept a little higher. All right. And that's really what I'm seeing. I think on the day, we could see vol be a little firm this morning. And then when we rally, if we rally out of this, we could see a real smash cut down. I would be less than shocked. Man, I'd be less than shocked if VIX futures settle near 16 if we are higher than where we are now by this afternoon. All right, folks. On that note, I hope everybody has a great day. You got questions, you can email me, marketoptionpick.com. You can call 888-TRADE-01. I'd like to remind everybody this is for educational purposes only, and none of this should be construed as investment advice. Consult your financial professional. Have a great day.